Good evening, everyone. This video is going to be a trading review and support session for April the 13th, 2022. And we're in a short week this week, so I do have Friday off, so maybe I'll get some rest on Friday. So the market is not been in a really happy place recently, with the war. Interest rates were beginning in the earnings seasons, which has been a little bit up and down. Let's see how we finish the day. We'll at least finish the day. Uh, well, yeah, finish the day above the 50-day moving average, which is a good sign. But it's still got some turmoil to go through. So we do definitely have interest rates on the way, and so they will be happening pretty soon, and balance sheet runoffs will be happening momentarily thereafter. So we do have some market volatility kind of come in, which is okay. As long as it's not crazy, then a little volatility does us some good. So good news is we closed above the 50-day moving average. So and we did have the consumer price index pre-market open, and it did show we're still in inflationary times. So and we will be for some period of time. All right, so here's the first 3 minutes. Right, we're definitely avoiding those first 3 minutes. The new indicator is in the burnt orange. That's the exponential moving average showing up, which is it's not just a faster moving average, it's a completely different calculation than a moving average is, and therefore it's faster. So I have noticed that this is something that the market keys off of as well, right? So being on the correct side of the exponential moving average is a very good thing. So certainly going to be trying to do that. If we're breaking underneath by much and or with volume, the exponential moving average above or below, depending on what your position is, and you're in a position that's going to set up for a reverse. So there's the first 3 minutes. We're the fast zone is moving up, and so is the exponential moving average. So that's the direction we're going to be looking at for trade. And the first trade was here, right? So that was good, right? Then the next trade, I knew I was chasing it a little bit. See this is coming up to the volume point of control, and broke out of the volume point of control. No, I'm sorry, not the VWAP, not volume point of control. Broke out of VWAP, and usually that's a chase because it wants to kind of go sideways a little bit sometimes, and or that's the reversal point. Well, I knew I wasn't going to necessarily reverse no matter what it did until it at least got down to the exponential moving average. So I kept it, came down, and it did come down back down to the minute average, to the exponential moving average, close, right? That's considered close, right? And then I added to it here, right, and got out. I don't remember if I got much of a profit, but at least I got a profit and was out of that sideways trade. And then sure enough, right, as it had gone sideways for a while, waiting on the exponential moving average, right, it kind of blew up again, right? So but didn't take that trade. I think that was my last trade for a while. And then here, right when it had caught up to the exponential moving average again, this is a little bit late, but at that particular point, right, it's already above VWAP, right, and but it's kind of, this looks like it's breaking out. It's kind of the same scenario, right? So I had to watch the breakouts here, because that one didn't necessarily work. Right, came back to the exponential moving average, right? But at that point, right, the exponential moving average was already moving down, right? So I didn't get out of that trade, and so right around here, so it's breaking down, right? So it's obvious it's breaking down, right? And it's also breaking down underneath the exponential moving average, and so I reversed through here, right? Added to it through here, and was out for profit down in here. I just saw your question. So What was the good reason you went long on the first trade? Okay, let me go back to it. Okay, so one, let's just start from the basics, right? Right, here's the fast zone, and the fast zone is moving up, right? The exponential average is also moving up, right? We even eclipsed the midline, right? We're between the flexes. That didn't really bother me too terribly much. Now, could I would have waited a little bit? Maybe, but I mean, but certainly by here, you at least by there, you got to get into this trade, right? And I was getting out by then, but I'm going with the exponential moving average, right? So maybe I rush it just a little bit, but certainly you got to get into this trade, and no matter where you got into this trade, this first trade at, you had profit, right? But I'm going with everything, right? Everything is moving up, right? It hasn't really bounced back too much, right? Sure. All right, let me move back over. So here's the reverse, and here's that reversal setup. I mean, if I'm not going to count on, maybe who knows? Maybe in the old days, I would have been counting on maybe seeing if VWAP was going to hold, maybe to see if the 2x20 was going to hold, right? Kept my long, but I had one here and two there. Even if I had held it and added to it, I probably wouldn't have been out, right? Maybe not. I doubt it. If I just added one, probably not. And as you can see, it came up here and held pretty much exactly at the exponential moving average prior to it even coming back up to the daily bias and the minute average, and then back down it came. Okay. Now this was kind of going right into 7 o'clock, and we were expecting Bank of Canada information at that point. So I didn't take that trade. But this is what we can expect, right? When it's breaking down, right, underneath the exponential moving average, I'm going to go in that direction. I didn't hear until after the news, right? And I knew that Bank of Canada did increase their overnight rates, and so took along here and was out there, right, letting it settle out a little bit. So now I don't know how mad the market is. So the exponential moving average is still moving down. So I'm really much less tempted to try to take counter trend trades unless it has really come down far enough and or long enough that it's moving above the exponential moving average and not moving into the fast zone, right? So not moving into the fast zone. So it came back up here. It's breaking back down again, and breaking down underneath everything. So I went short here. Sometimes these things go sideways for a while, right? But ultimately it broke down. So profitable there. And then let's see. Oh, so coming back down here, right? Here's the next trade, right? So the breaking down back, well, it's not breaking down, but it may have to start watching this. The EMA is slowing down, right? Because we've been going sideways for some time, but it did have some selling. It's kind of breaking down everything. So I went short here, right? But it didn't hold, right? So I reversed right about here, right? And added to it. This is the one where I made some kind of a mistake on the dome. So I got out, and net, the net result is I think I lost a tick on this trade. But I think I reversed, and then when I added to it, I just kind of placed my exit levels at normal profit, and forgot, and maybe plus a little bit more, but I don't think I ever had time to really hit generate to see how many points I lost on that. So anyway, I donated a little bit, made a little bit of money for AMP, and donated a little bit of my profit on that trade. It happens. Thankfully not too often, but it does happen. Let's see. Okay, what am I doing here? I must have gone short some. Oh, it's short here, right? It's breaking back down to the minute average in fast flex. So I went short here. It was going into VWAP, right? Didn't quite get me out. This might have been one of those I was a tick short on. Comes back up, but overall I'm still not necessarily thinking the market is okay. It did kind of come back over the exponential moving average, but right, and this is why I'm not freaking out. The exponential moving average is pretty flat, right? So I'm not, when the exponential moving is pretty flat, I'm not necessarily keying on it. I'm looking at the other support and resistance levels, and it still had to get back through the daily bias. And I remember, telling everybody, it had already rejected, right, up here at the 2x200, right? So since the exponential moving average was flat, I was going to hang with it some. And sure enough, it just barely challenged. It didn't even quite challenge the daily bias, and it's coming back down with some selling. See, there's the rounding off of the selling here, right? So I added to it here and was out, down in there. And then I was, at that point must have been fairly profitable. So I disappeared for a minute, and I came back and had missed this good setup. So I mean, here we're in the fast zone, and the exponential moving average is in the fast zone, and I don't necessarily like it when it's in the fast zone. So because it had been flat, it is breaking down now, and we are getting good selling. But I wasn't in front of the computer because somewhere in here, even if I traded somewhere in here, right, then it would have been easy profits. So missed that trade. I missed another one as well. Not okay. So it's coming back up now. So I'm back in the office, breaking back through the fast zone. The EMA has already started to go back up. So take the trade here and out. That was a relatively easy trade. And then I was gone again. I don't know where I was, but anyway, gone again. Missed another trade, right? The EMA is stair stepping up, right? We're above the fast zone. Fast zone is stepping up, and it's running away from, right, the EMA with expansions. That would have been an easy trade. So shame on me. But at this point, I'm up. This is my last missed trade, not my last trade, but my last missed trade of the morning, and I was up 12.5 points. I did take one trade a little bit later on in the afternoon. It had more opportunities, but I was around for one more trade, so I actually ended up the day at 14 gross. But still, even missed a couple trades. It's up 12.5. Could have been up, and I had that trade that I didn't quite manage correctly either. So probably could have been up 16.5, 17, something like that, in the, at a little bit after 8 o'clock. But oh well, I took their money. That's all that's really important. All right, so that's kind of another day of looking at the exponential moving average. I'm going to try to make some either a little booklet or something to kind of explain static versus slow versus fast, support resistance, and then price action. But it may take a while. But I do want to do that. I think I'm beginning to be able to see the picture of how to tell the story for beginning traders. I know you guys will be, pick it up and add this new component to it fairly quickly. But for new traders, they need to have some basis, some grounding before they can really wade in here. Okay, so any questions on that? It's okay. So the statement is it's almost the same character as the minute average movement. So what's the big difference? It's faster, right? it pays more attention to. It's even faster than a weighted moving average. A weighted moving average will count the most recent information. It'll weight it more than the older information. The exponential moving average is even faster than that. Okay, so it's going to react faster. So the big difference is it's just faster. And the fact is, I mean, the reason it works so much is it's kind of like the four pivots, right? Anything you see that ends up working and it's working well, right? And this particular XMA that I kind of developed, it's working well. I didn't invent it for sure, right? It is known mathematics, right? So I didn't invent an exponential moving average. I just was able to translate it into something that we can use on our charts. Otherwise, the exponential moving average is a little bit difficult in my mind to trade with, for instance, right? If it's not on our kind of chart. But the reason it's different is that bigger traders, are using it and watching it just like they do use the minute average, but it's going to give us a faster reaction to what the big traders are doing. That's my best explanation. I'm all about speed these days, right? That was the logic behind Ultraflex, right? And the exponential moving average is another tool in that speed arsenal that's faster than the minute average. If you want to wait till the minute average, you can, right? I mean, and just trade around the minute average, you're just not going to get nearly as many opportunities. Does that make sense? If the price action is on top of the EMA, yeah, you're going to be looking for price action reasons to make you go in that direction. I mean, obviously, volume is still important, expansions are still important, all those sorts of things. Not running into a major resistance point, it's all still important, right? It's all still important. So you still want to see, some, unless they're really coming after it with volume. If they're really coming after volume, then it really doesn't matter, right? So, but you really want to go in the direction. Let me warn you a little bit as well. I'm not suggesting you take crossing patterns, right? So if it's been below and the exponential moving average is moving down, just because it crosses a downward moving exponential moving average is not a good reason to take the trade. I just want to make sure you understood that. Right? You do want to go in the direction that the exponential moving average is going, right? And it's pushing and continuing to go in that direction with volume expansions and those sorts of things. Let me make sure I give you an example. All right, so this, for instance, right, this was a little bit, not total, but was a little bit of a crossing pattern, right? We had been, all of this price action here is underneath the exponential moving average, right? But it had started moving up here, right? And it was breaking out of the fast zone, right? So I felt good about it. It was with the flex paint, all those sorts of good things. Let me see if I can find. I want to give you another couple of examples, right? This one on where was I, right? It's the exponential moving average is up here. It was flat, and it started to move down, right? And you're taking trades in the direction of the exponential moving average in expansions and volume. Right. Now let me see if I can find an example today that was actually away from, yeah, let me see if I can find an example just from a video perspective that it's away from the further away. I don't know if it happened today or not. I mean, okay. Well, here's kind of this one is kind of a reason. I mean, we have it. Okay, we touched the minute average way back here, right? And we're away from the minute average now, right? So here's an opportunity for a trade that's already away from the minute average, right? But everything is going in that direction. Let me see if I can find something else. I mean, it's still going, right? So what would be a good one? Everything is aligned here, right? And I think I mentioned this one in the room. I wasn't watching, but everything is kind of aligned here. So we're pretty far away from the minute average, right? Exponential moving average is still moving up, right? And you know, it had kind of consolidated, kind of quieting down a little bit. But you know, the AVR was positive in this area, right? And it's running away from everything, right? In the up direction. Let me see if I can find. I mean, once again, right? It kind of settles down after a while, right? Kind of settles down. Exponential moving average catches up, and you can see the exponential moving average is what's support, right? It's not. I mean, yes, the minute average agrees, right? But the exponential moving average is faster, and they're buying at a rate, you know, they're letting it go, and they're letting it go sideways enough, not to the point where it gets down to the minute average. I mean, they're just letting the exponential moving average catch up, and then off it goes again, right? So it's you can kind of treat the price action kind of like the moving average, but it's going to be faster and give you more opportunities. And for me, if I do chase a little bit, but I'm in the right direction, I'm willing to hang with it a little bit, as long as it's the exponential moving average is still moving in my direction. If it breaks down under it, with you know, selling kind of volume and those sorts of things, then I'm going to be out in reverse. Okay, so I think you got that. Yeah, yeah. I like it. I'm using it as an anchor. It was a little bit more difficult for me to use the minute average as an anchor, because it just didn't give me the same feeling, right? Because it's too slow, and I'm all about speed. And this exponential moving average is really giving me an anchor. Any other questions or observations? You got the software all loaded. Everybody got the software all loaded. Yeah, I mean, if it's a low volume, well, if the market's not, and I'm going to be more patient about this as well. If the market's just not doing anything, right? And the first day I was using this, I kind of got caught up in using it too much. I mean, the exponential moving average, the market really wasn't doing anything, and the exponential moving average is in the middle of the fast zone. Well, to me, that means, you know, that's now also a signal that the market's not doing anything, because it hadn't been really moving quite a bit, right? I'm just going to leave those markets totally alone, like I have a few times, and let it make up its mind which way it wanted to go. And then I'll find a trade in that direction. So it's really, you know, low volume is not really good. Oh, just okay volume is fine, as long as you're patient enough to make sure the market is ready to do something. Meaning that the XMA expenditure moving average is trying to move, is moving, and you're going with it. Okay, very good. All right, any other questions? Okay, very good. All right, come back in the room and watch this thing with us if you want. So anyway, have a great night, and we'll see you in the morning.